Welcome to Master the Market Lesson 2. Today's session, titled Why You Should Start Investing in the Colombo Stock Market, a timely, important topic, especially as most Sri Lankans begin to explore the power of the stock market for building long-term wealth. I'll walk you through this lesson based on 5 key points that highlight the opportunities for investing in the Colombo Stock Exchange, CSC. These are grounded in both local and global perspective, simplified, clear, and practical for anyone, even if you are just getting started. So let's dive and discover why the CSC could be one of the smartest financial decisions you make. In 2024, the Colombo Stock Exchange delivered an exceptional performance with the all-share price index ASPI soaring by nearly 50% over the year. It closed around 15,945, setting a new all-time high. The S&P SL20 index, which tracks the top 20 largest and most liquid stocks, also surged by 58%. As we moved into 2025, this momentum didn't just continue, it accelerated. While most analysts forecast the ASPI to reach between 17,500 to 18,500, by mid-year, the market has outperformed expectation, crossing the 20,000 mark as of now. If key economic conditions remain stable, such as stable interest rate, improved investor confidence, and consistent foreign inflows, we could very well see the index push towards the 21,000 to 22,000 range in the medium term. Supporting this rally is the robust growth in corporate earnings. In 2024, listed companies posted a record combined profit of approximately rupees 666 billion. Early indicators for 2025 suggest that earnings could touch or even exceed rupees 700 billion, further strengthening the fundamental case for investing in the CSC. Another key reason to invest in the market right now is low interest rate environment. The central bank has steadily reduced policy rates, bringing the key rate down to 7.75% as of 2025. With bank deposits and fixed income returns becoming less attractive, investors are turning to the stock market in search of better long-term gains, making equity a more compelling choice today. In addition, Sri Lanka macroeconomic landscape is showing encouraging signs of recovery and reform. The country is making steady progress on debt restructuring while bringing inflation under control and stabilizing the currency. These improvements have significantly boosted both local and foreign investor landscape, creating a more stable and attractive environment for stock market participation. Let's now examine the performance across key sectors, starting with the banking and financial sector, which has demonstrated remarkable resilience and growth. In 2025, lending activity picked up, non-performing loan ratios declined, and top banks like Commercial Bank, HNB, and Sampath reported year-on-year earnings growth of 91%, 161%, and 60% respectively. This sector continues to be a backbone of the market, offering both stability and upside potential for investors. Beyond banking, we are also seeing renewed levels in sectors such as consumer durables, insurance, food, beverage, and tobacco. With inflation easing and purchasing power gradually returning, consumer demand is on the rise, supporting stronger earnings in these segments. As the economy recovers, these sectors could present some of the most exciting opportunities for medium to long-term growth. Another important reason So the Colombo Stock Exchange remains attractive at its valuation compared to regional peers, while many Asian markets trade at a P ratio of 15 to 20 times earnings. The CSE is still trading between 7 to 10 times, and to that, a price to book ratio close to 1. And it's clear the broader market is still undervalued and offers strong upside potential for value seeking investors. On the infrastructure and regulatory side, the CSE also had made significant progress in enhancing transparency and investor confidence. In 2025, several key initiatives were introduced. The adaptation of XBRL-based financial reporting improves the speed and accuracy of financial data. The implementation of central counterparty CCP mechanism to reduce settlement risk, and the listing of GSS Plus green bonds, opening the doors to a sustainable finance and ECG conscious investing. Together, these reforms signal a more modern, transparent, and investor-friendly market, helping the CSE become a serious contender among emerging markets. We are also seeing foreign investors returning to the Colombo Stock Exchange, drawn by several key factors: undervalued share prices, a strengthening rupee, and a clear improvement in corporate governance and regulatory transparency. These trends are helping to restore international confidence in Sri Lanka as a serious investment destination. For local investors, the barriers to entry are remarkably low. There are no capital gain tax on share trading for individuals, and the only cost is a small transaction levy of around 1.12% per trade. Even better, many stockbrokers now allow you to start investing with a little as rupees 10,000, making it a highly accessible to first-time investors. At Softlogic Stockbrokers, we have made it even easier to get started. You can open an account entirely online, access user-friendly trading tools, and join our regular webinars and market updates. And very soon, we'll be introducing a stock market stimulation platform, a safe, risk-free environment where beginners can learn and practice before investing real money. In summary, the Colombo stock market today offers a blend of building momentum, macro stability, low valuation, and easy access, making it compelling time to start investing for long-term growth. Just be mindful of risk and stay disciplined in your approach. This brings us to the end of today's session on why you should start investing in the Colombo stock market. I hope the insight we shared have given you a clearer understanding of the opportunities that lie ahead and the confidence to take your first step or go further as an investor. In the next lesson, we'll dive into two essential topics that every investor should understand. First, we'll explore the myth of investing, uncovering the common misconception and mental blocks that often hold people back from building real wealth through the stock market. And then we'll focus on the risk of investing in the CSA and how to manage them. So stay tuned, and as always, invest wisely, stay curious, and keep learning.